Welcome to the Swing Trading with Cycles channel. We are going to do our update on natural gas today. It is January 4th. It's the second full trading day, at least in the US. And natural gas is trying to bounce today. If you're new to this channel, welcome to the channel. We focus on price action here, which is an objective way to understand what's happening in the market. Remove opinion. You don't have to listen to talking heads on CNBC. In fact, my goal is for you to be able to look at a chart and understand what's going on. You don't even need, you shouldn't need other people to consult, right? Obviously, sometimes situations are a little bit more nuanced, but you should be able to look at a chart and within 15 to 20 seconds know, okay, this looks really risky because it's red on all time frames, for instance, and making lower lows. So that's what we're looking to achieve here. We're going to focus on natural gas, but do know we cover pretty much every asset on this channel. So take a look at the playlist on the channel. It's pretty well organized. Broader markets, crypto, uranium, precious metals, the whole gamut. So today is day 19 of the daily cycle. And take a look at for a pinned comment, overview on cycles analysis. It's a great way to just easily, it's a shorthand for understanding how long has this rallied, how long has it declined. So with respect to this current cycle, we had a short little tiny 5-day rally, and then we proceeded to decline for 13 days. Today we're trying to bounce, although to be clear, we did not make a lower low yet, right? So the low today, and again, this is January 4th, and this is intraday. It's about 12:40 right now. I'm not sure when I'll be able to post this, but the low is $3.90 for today, and then the low for yesterday was $3.89. Wow, so like we missed it by a penny. And so it's still just an inside day. The high yesterday was $4 and almost 40 cents. And so as I posted on Twitter, if you're not following on Twitter, definitely take a look for a link in the description. That is the level we need to get above. That would give us a higher high here. That would make this a swing low. Incredibly important that you understand that. Lots of background information on that concept as well. TLDR, a swing low, is how an uptrend begins. In other words, you want to look for a swing low to find a bottom. And so, to be clear, if we move above this line here, which is right around $4.40, which is a high from this candle, from yesterday's candle, Tuesday, it would give us a higher high on the daily chart, and it would make this candle a swing low. The fly in the ointment is that it's still not super late in the cycle, which is to say, generally we see that these cycles last a bit longer. Like this one was 30 days, this one here was 33 days, and coincidentally it also topped out on day 5. It doesn't mean it has to be in the 30-day range, but that just means you want to be cautious that this could be something that's going to roll over relatively quickly. And in fact, my base case, my assumption, my expectation is that it will. So this is day 19. Maybe you see a bounce into day 20, 21 maybe even, and then a rollover into new lows. And if you think about what that would mean on the sort of bigger picture chart, you're looking at this weekly chart. We've talked about this in our previous videos. Multiple time frame analysis, super important. It's how you understand how things are happening from multiple angles. This level right here, this $3.60 area, is like a magnet right now. Of course, nothing can decline in a straight line. You need you need a lower high. You need that counter trend rally to keep the downtrend kind of healthy, right? I mean, look at this, just this downdraft. So just as we looked at on the daily chart, we probably get a move above the high of this week, right? Like maybe even to the middle of this candle, maybe like around this line, right? Like almost kiss $5 maybe, and then we get our lower low. And that's how you can kind of think about how price action is going to sort of coordinate between time frames, like in this case, the daily and the weekly. Now, it's also completely possible that this is our reversal. This is it, right? Let's just be clear, like what would that scenario look like, right? That would mean that yesterday was our cycle low on day 18. That would mean today is not day 19. We're actually starting a new cycle, just like this was a new cycle, just like this was a new cycle, just like this was a new cycle, right? And we have to be prepared for that possibility. The way we would know that that's happening is if we start to make higher highs and higher lows. Let's look at the lower time frame to understand that in a little bit more detail. So this is your hourly chart. And you can see this is the same level that was drawn on the daily chart. Again, it's that multiple time frame analysis. We would want to see something like this, right? We make a move above this, back test it from above, and it holds, right? So what is that? That's going to be a higher low, right? And then ultimately, we're going to need to take out this cluster, right? On our way down, this is your hourly chart, right? This is just a more detailed version of that daily, like just cascade lower that we've been looking at. You can see the lower highs, right? Like you can see them, if we wanted to draw them like that, that's a little one. That's another one. That's more like sideways consolidation before a move lower. So you could see a world where we actually have to take out, I should say that's the way it would work, right? We have to take out these little higher lows on the way up, right? Just like they held price down on the way down, this is how you know price is bottoming. And to be clear, we would know that that hourly trend is going to create higher highs and higher lows on the daily, right? And this has the potential, if this were a bottom, to be like a V-shaped sort of situation. And that's the great news here, that the risk reward is amazing in that we're either creating a very healthy counter trend rally that's going to lead to lower lows, right? Or we're getting a genuine bottom that maybe is going to be incredibly violent. Either way, you get to make a lot of money there. Last concept I want to make sure is clear, and then we're going to look at the yearly chart. An important signal that's kind of showing up there is that once you've got this cascade lower, like let's say like once you're like right here, it's kind of arbitrary if you pick your point, but you start to get to a place where this is a risky short, right? Like you're saying like, oh wow, price is dropping, I should go short. Especially I'd say once you've passed this pivot, right? You've triggered a bunch of stops. You theoretically would have gotten a bounce, and in fact we did get a tiny itty bitty little bounce, right? Like you can see that. You can see price opened around there, right? It kind of bounced here, like it washed below and then kind of moved up a little bit higher. And then that next day, we actually got back above that price. It looked like a fake breakdown in real time. That's important to understand. And this is a little bit of advanced stuff, but like if you think about it, we triggered all these stops on this day, right? And then that next day we lingered around. We actually broke above again, and then the next day we broke above again. So these were powerful fake outs in real time. And I always say, important to understand, if you have an upper wick on a candle that's red, it means at one point that candle was green, right? Think about that. That is always the case. That's just mathematically how it works, right? Because we know this candle that's red opened here. I'll zoom in, make sure that we can see that. We know this candle opened here because it's red, right? If it opened here and it was all the way up here, it means it was green, like right from here to here, right? So in real time, it looks like, oh, maybe we have a bottom. Maybe this is our bottom. So that's important to understand how the candles are going to transform, and not to get kind of faked out, but also be open to the idea of getting a reversal. You just want to make sure that you know what evidence to look for to not get that kind of fake out. The last thing I want to bring up is the big picture charts. We'll look at the monthly, and then we'll actually look at the yearly chart, which there's a very interesting thing building there. So this is your monthly chart. Always important to understand what the opening price is for a given candle, especially like a monthly candle or a weekly candle, a candle that is a higher time frame. So the opening price for this monthly candle was $4.30, just about $4.40. And obviously that's because we just opened yesterday, right? We have very little price action on the month. So another way to think about that is if we can make a higher high on the daily chart, which is to say get above $4.40, it'll also turn the monthly candle green, which is important. Green candles are going higher. Red candles are going lower. It really is that simple, folks. When you look at a higher time frame and the candle's red, that's bad. That means it's going lower. And when you look at the successive time frames below, like, oh, red monthly candle, red weekly candle, red daily candle, it means price is going lower. That is not the time to go long. That is absolutely not the time to go long, right? And so the reverse is also true. When you start to see everything is green, that is the time to go long. And an even better time to go long is when things are about to flip from red to green, right? Because people are kind of caught off sides, right? And that's where the multiple time frame analysis comes in. because we know that that daily move is going to make this monthly candle green. Now, again, I still suspect that this is a lower high, but notice what that's going to create here. It's going to create a bullish hammer green monthly candle if we can get that higher high. So far, we've not been able to string together a rally of more than a few hours, and so it would be important if you can do that. But again, just know that what that's going to create, something like, is there a candle here that closed like that? So there isn't, like something like this, right? So this went on to make a lot more, this went on to make a lot more progress, but it would start to look something like that. And then if we got more follow through, like this is definitely a potential bottoming candle. In this case, it happened to actually lead to follow through, but it doesn't always lead to that. And also keep in mind, we're only on the second trading day of the month. And so this candle is going to go through a lot of change before it closes at the end of this month. And so you want to make sure that you're also keeping that in mind as well. And now, speaking of the sort of big picture, I want to look at the yearly chart for a second. We'll close out there because there's an interesting, like, it's important to know kind of what price, and we'll take off the drawings. That might help. Let's hide all. So, and I talked about this in previous videos, in the previous natural gas videos. This thing is a wild trader in the sense that it has these big wicks, right? And we just talked about that. An upper wick is a pullback on a lower time frame, and it also means, well, we said on a red candle, it means the red candle was green. In this case, or excuse, at one point, in this case, these candles managed to stay green. So this is your yearly chart. Each candle is a whole entire year of price action. This is your 2021 candle or 2022 candle, and this is your very nascent 2022-23 candle. Obviously, there's just 2 days of price action, so a long way to go before it's fully formed. But important to just see this bigger picture that we end up with these big up, like we got a big upper wick in 2021 as well, and 2022 was more of like a doji. But if you understand what's happening here, 2020, the COVID year, we made a fresh low, so below this low here from 2016, which had been the low since then. So that was at $1.61. So in 2020, we made that low at $1.44. And since that low, we've been making higher highs. And we've been holding higher lows. What do I mean? Like, look at that. In 2021, we made a higher high because we went above the high from 2020. We also made a higher low because look at the low point for that year. It's well below this low. And then in 2022, we made another higher high, right? We got higher than this. The problem is we didn't hold that into the close. That's significant. We're going to want to watch for that. And we also made a higher low. This low, much lower, much higher than this one. Higher highs, higher lows. That is what an uptrend is. Notice what we are at risk of doing here. The low from last year was $3.64, approximate. And my expectation is we are going to dip to that area, $3.50, somewhere in that neighborhood, and potentially even lower. We'll see how price action reacts. So to be clear, that means I expect we're going to make a lower low on the yearly chart. That is hugely significant, but there's a huge caveat. We're so early in the year that there's a lot of time for price to recover and do something different, right? To be clear, like this is an example of a lower low. Like this made a lower low than that, right? That's a lower low than that. That's a lower low than that, right? These are examples of lower lows in the yearly chart. Doesn't happen that often. And when it does and you get follow through, then you can obviously be in for a few years of downside. So we're going to be watching for that. My expectation is that what's going to actually happen is we're going to make that lower low, and then we're going to get a rally, right? We're going to get our cycle low, and we're going to have a rally coming out of it, and that will essentially be something kind of like a false breakdown, right? You can imagine this kind of area is going to trigger a lot of stops, and you can see a world where that move higher is going to be a really violent one. Now, are we going to make a higher high in 2023? Only the fortune tellers can know, but that's what you're gonna watch for, right? Like potential exhaustion once we get down to that $3.50-ish range. We've broken the lows from last year, so we've wiped out all of the gains from 2022, right? Then we see how price behaves. It could be a springboard out of that. The reverse can also be true, though, folks, that we could then go looking for this low here at $2.40. And I just talked about that level in my previous video. It's not a coincidence these levels line up. Like, you can see the level on a monthly chart or a weekly chart, and it's significant on a yearly chart as well. It's all connected because it's all the same price action. It's the multiple time frame analysis. And so this is going to be a very exciting year for natural gas, but also all assets. So again, if you're new, please subscribe to the channel and take a look at the different playlists. All kinds of assets reviewed. These concepts work for anything that trades, open, high, low, close. Incredibly powerful. This will change your investing life. Thank you for watching this video. For now, we'll sign off. But as new things develop, I'll make sure to tweet about it. So definitely follow on Twitter if you're not. And we'll see where this reversal leads, right? We'll definitely take a look to understand, is this going to be more sustaining? And we'll also look at Boyle, UNG, and KOLD, kind of see how those are impacted as well. So thanks for watching for now.